Here we go. Finally, Zoom and YouTube are cooperating. If only Zoom's chart was half as compelling as Google's, I guess it would be a different story. Hey, gang, we're back. GP and Bags. Nick is on hiatus, which that's good. We all need some time to recharge. So we miss our brother, but don't think we'll have a lack of things to talk about. It's been kind of a crazy week a little bit, GP. You had some big moves. OPEC's always fuckery, like we know that, right? But some big moves. Tech just going crazy. I mean, look at Apple. We're just going to go straight to Apple. Like, that's a big week. 4% on the Apple chart. That's a pretty good week. And in the last 7 weeks, 8 weeks, we've had a 5%, a 5%, and a 4%. That's compelling. That's compelling.
And how many inside weeks is that?
Whole bunch.
Whole bunch. Inside of which candle? The earnings candle.
Yeah, it was a big
this is your power earnings gap candle, right? So it's been beautifully consolidating that candle, holding above all the key kind of moving averages and looking like it's gonna bump out. You know why? Because Tim Apple is the only true American national bank.
Well, I mean, there's some other people out there with some cash, but yeah, Tim Apple's got the cash. There's no doubt about it.
There's no JP Morgan Chase. There's no Goldman. It is Apple and it is Google.
And I gotta confess, I really screwed this up. I will sometimes trade Apple in place for SPY. And this was the bad week to do it. This was not the week to do it. And I had 3 or 4 instances to get out of my Apple short and didn't until it was too late. And I got clobbered. But that happens sometimes. You know, we gotta chalk up our losses and take them like a non-degenerative person we are. But yeah, I hated getting all up there. No, I cleaned that. That worked out well because it absolutely skyrocketed. Speaking of NVIDIA, I mean, here I'm sitting at 240, like, yeah, that was great. I got out of that guy, and now it's 257. But it looks like, I mean, it's hitting that upper
Nope.
I know your thesis.
Nope.
I'm not saying short NVIDIA. Parabolas can stay parabolic. So I'm not saying short NVIDIA.
I mean, the first rejection candle after 3 weeks of consolidation and the move up is not like you'll get your moment to short. Like you can short there and it'll pull back to like 245-ish or whatever. And you think you're a rock star and then it's going to reverse on you higher. I don't think this is the moment where you have a long-term short, right? Like,
no.
That's what I'm trying to say, right? Like,
and I don't do long-term shorts. Like it's a swing trade at best.
Yeah, and by swing trade I mean like an intraday maybe trade. Maybe a day.
I might hold it a day or two sometimes, but yeah, it's not like a weekly or multi-session thing usually.
After the offering news, after all of that, it took consolidation and it busted higher. The first rejection candle on a red day in the markets after a beautiful week, to me, is not the end of the move. Maybe you get a blip down. So that's just where I think on NVIDIA, I still think it has room. I think the trend line that people are drawing, not picking on yours, I don't think it's the right accurate one, but that's me, right?
Yeah, well, I mean, we've talked about that from the beginning of the pod, right? Like TA is more of an art than a science, and we all have different perspectives on the way we see things.
Yeah.
This is just a clear channel to me, not necessarily the trend line. The main trend line is this one in black. But I think probably more relevant is this one. And excuse me. And we need to see some follow through above this 246 level here on the SMH. And if that happens, then NVIDIA is fine. Like it's not gonna be a thing.
And like just looking at like people are trying to short NVIDIA every moment that they can.
It's disgusting.
And the puts, the premium represents that insane thirst to short the hell out of NVIDIA. And for so far, it's up 102% for the year.
Yeah, it's pretty ridiculous.
Yeah, I'm happy you got your, not you bags, but in general, I'm happy you got your shorts for your intradays and whatever, but it is not in a bear cycle. It is not.
No, it's not.
Jesus Christ, people, like it's up 102% in 3 weeks. Yes, it can come down. I'm not saying that, but this
of course. Well, again, like overbought can stay overbought, oversold can stay oversold, and parabolas can keep on parabolaing until they crash. And I think this is not the crash moment. I mean, if you're trying to scalp here, then God bless you. Like if that's the way you make your money, I'm not, knocking it, but that's a hard life to live. I can't do it.
Yeah, no, and I just see it's like, oh, this is going to be a bear trend, and then they're out of their puts within like 3 hours, and I'm like, what? Are you scalping or are you long term? I'm confused on what you're trying to do.
I mean, look at that. It's actually 76% year to date.
Okay, fine.
I mean, you're only 24% off or whatever, but it's all right.
From the lows of the year? Maybe
no, that's just the candle.
Yeah.
So all right, I from the lows, I can give you 84%.
Okay, all right. Not bad. But it started the year off reclaiming the weekly 21 SMA that it continued to reject all of 2022. So inherent shift in character on how the year began, right? And that was $100 ago.
I mean, it's well, you've got, the forces behind it with AI, right? Like NVIDIA's a monster and everybody's like, oh, it's overpriced. Well, it's priced what the market deems it's worth. So if it's overpriced, then that's blame the market. You gotta go with what works. And speaking of something else that works, Meta has been working. I think Meta still looks really good, as much as I hate Facebook. But it looks pretty sharp, man. It gave you those inside weeks there, just like everything else. This is what we started the conversation off with when we first hopped on the Zoom. Is big tech is the new banks? Like, who's got money in the bank? You got Apple, Tim Apple, you've got Google, you've got Meta, right? Big tech has money in the bank, and yeah, it just looks good. I remember somebody, what was it, a couple
Microsoft,
Google. I mean, look at that.
Yeah, Google, I was just telling Bags about Google. Google has $140 billion in cash, 20 billion sits in cash just for shits and giggles, and 120 of the rest of it sits in short-term marketable securities, which they earn 5% on every 3 to 6 months. Like it's a cash tailwind, right? Like it continues, and that's just ooh.
Microsoft gave you 6 weeks to jump on board.
Yep, and it engulfed it in one, right? Yep. Like it just
gave you 6 weeks. It's like, all right, we were going to break out. All right, we broke out. All right, we're going to retest. We're going to give you 3 more weeks of retest. And then boom, 12.4% in a week. Those are big moves. And this was one of my, as you guys know, I love big cap tech, and heavily invested in Apple and Microsoft. A large complaint is always, well, they don't move so fast and they're so slow and they're $1 trillion company, and to get them to move, blah, 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 mid cap, etc. Well, no, these are the situations when big cap moves, is because all this uncertainty in the world and who has enough money in their vaults to just do whatever they need to do. Mega cap tech.
Yeah. Does that mean Fubo is ever going back to 60? No. That's not ever happening again. That was a byproduct of the ZIRP, right? ZIRP.
But those weren't the only big moves. I mean, overall, I think it's worth noting, right, that the market, when we talk about the market, we're talking about the SPY or the Qs. The market was only up 1% for the week. Not even the best look on the SPY.
But on what news, right? That's
on all the banks, right? Yeah, on all the banks, and that's what's hurt the Russell the most. You 5.8% on the Qs, big engulfing candle there. But then you look at the old IWM and just slaughtered. And that's one thing that a lot of people don't realize with the small caps is there's so many of those regional banks in there. You had these mid and small cap names in the Russell, but you have a lot of banks, a lot of financials, and that can be a tough thing when you're trying to really pluck out growth.
And to me, I still see higher lows, right? Like this to me is not making higher highs yet, agreed, but it's making higher lows, right?
For now.
It's coiling, for now. And that's on the back of how many banks failing so far? SBNY, SIVB,
Silvergate,
3, and then Credit Suisse getting bought for pennies on the dollar.
Literally 27 cents on the dollar.
Exactly. And so, like, what is the price action saying in all of this? Is my conversation for a lot of people is like, okay, and to me, I was telling Bags before, logically none of this makes sense to me. You have banks that are failing because they bought US treasuries. Like my simplistic brain just can't get past that conversation, which is, wait, what? Like you're insolvent because you bought US treasuries? I get it, duration risk and all that other stuff. I'm not talking about that stuff, but you actually bought assets that are supposed to be risk-free, and this caused your insolvency. So to me, this looks like vulture behavior, trying to get cheap assets. And because to me, it's not 2008. 2008 was, why it crashed 60-70% on that Lehman Brothers news is because no one had any idea how to value any assets, even with a government backstop. But you have a government backstop here, and you have assets that are valuable, right? You can tell me exactly what the lost value, the unrealized gains or losses are here.
And I'm seeing a lot of people wanting to dumpster dive into the banks right here, and I'm not saying that it's wrong or it's right to do so. The KRE, I mean, just whipped, right? Like just completely whipped. You look at the XLF, which has your big banks in it. So we've talked about this prior breakout before. So you're still at a support, resistance point here, pivot. So if it can hold this area, not the worst looking thing in the world. And then you've got like the 3x shares. I know Big Greenie from Charts for Charities been jumping in this one. This is basically the XLF 3X.
Did you know that 15% of XLF is Buffett?
Yeah. and speaking of Buffett, right? He had there's all these regional bankers that have been in Omaha all weekend and the administration. So it's going to be interesting to hear what comes out of all that. But
And what does he have?
he's got money.
He's got cash.
He's got cash. I don't want to speculate too much on that, on what that might be, but it's worth keeping an eye on. It's worth noting. I mean, Buffett put a huge backstop in some of these regionals. I mean, you could see this FAS or KRE turn on a dime Monday morning. That wouldn't be a surprise at all.
And that's so XLF closed exactly at the highs of 2008, like to the penny. 2008 highs were $30.98.
There you go.
And we closed exactly at the highs of
we can pull that all the way across and you can get it a good look. There you go.
So to me, this is after 13 years, it's finally broken out and it's consolidating the breakout here, right? And we're still holding above that level. I think that's the level in the sand on a closing weekly basis that's going to be important moving forward, is the 2008 highs.
But you know what, GP? I was thinking after you said when you went dumpster diving in the banks and you basically, I forgot which one you said you picked up, but every third year the dividend's paying for the position.
Yeah.
I started looking around, and Ally is a bank that I've liked for a long time. I mean, we're at the beginning of pandemic lows here for Ally, and this is a 5% yield to wait. I'm not in it. I'm not saying anyone should get in it. They do have automotive risks, which the auto industry is not so great right now. But overall, I think they're a pretty good bank. And at 5%, I mean, I would be lying if I didn't say that I was looking at it frequently.
You want something better?
Sure.
PAC W.
Pacific West Bank Corp.
Go to the daily chart. Look at the candle. If you can pull up volume too, of course.
I've always got it on volume for you, Daddy.
Look at the volume that stepped in grain wise, right? And this gives you about a 9.5% dividend.
A 9% dividend for $9.
Yeah, 9.5, I think.
Holy shit.
Yeah, and this had insane insider buys immediately after the drop. I think there was over 1 million shares bought in the last few days.
$5 and down at $8. Heck yeah.
Yeah. So this is one to keep on keep an eye on.
All right.
Because there was like when you have insiders come in and buy over 1 million shares on this demolish, maybe they don't know, right? What's going to happen, but I feel like they have a better idea than you and me do.
Oh, yes, of course. And I'm actually pulling it up. I want to see what the insider is right now.
Yeah, they had one of the biggest insider buys this time.
Holy hell. Since March 13th, they have had more than 6, 7, 8. More than $2 million worth of insider buying, and that's directors, president, and CEO. The president and CEO.
Shares are dollars.
Twice. That's dollars. That's value in dollars.
Okay.
So more than 2. I mean, I can chart it real quick.
I think if you get an opportunity to buy under like the 840 level, I think it's a gift. I don't know if you're going to see that again, but if you do, then it's probably time to get out. I feel like that's the support here that can be really good.
I'm doing my quickest version of Google Sheets here. So,
and the reason I would keep stops in something like this is because we don't know what the news is going to do, right? So if the news comes out inherently bad, even the people who buy can lose another 30-40% from here. Ultimately, in 5 years, be fine, but in short term,
More than $1.5 million bought in the last week. And total number of shares is about 75,000 shares in total. No, sorry, that's a rounding error.
No, that's
100,000 shares. Yeah, that's not it.
Yeah,
I missed a column. Told you I was just trying to do it down and dirty here. Excuse me. Pardon my cough. So yeah, interesting times we're living in. One thing that we love to talk about, or I love to talk about, is this boy right here, the old Bitcoin. And what old Bitcoin do? I forgot what old Bitcoin do. It ran that monthly doji, didn't it? And right now it's trying to break out above the monthly.
How many people call that a gravestone doji?
I mean, it's already above the monthly 50. It's going to go above the monthly 21. It already is currently, but yeah. I mean, if that's not risk on, I don't know what is. There's still time in the month, so this could still reverse. But I think we did a pretty good job of calling that one on the range from 19 up 25, and once you had that drop, that was the springboard effect.
We do you remember our conversation when we talked about it with FTX? I was like, if we talked about this quite in detail at that time, saying if FTX couldn't destroy crypto, it's probably bottomed, right? And it's so if you have one of the largest firms that supports crypto accused of fraud and crypto's not collapsing, which everyone thinks is kind of a fraud or whatever, then it's probably something to pay attention to. And it's done well.
And we also had the FUD out there, right, with excuse me, with Binance. So that's, nobody really knows what's going on there, but
Silvergate and all these.
Binance is a huge player, as we know. But I really like the ETH chart too. I know we've talked about ETH over the past couple of weeks, but ETH's breaking out for real. And
it's underperforming to Bitcoin, but yes, it's breaking out.
Currently, yes, it is under Bitcoin. We look at the ETH, the BTC chart here. It's just below that midway line.
And I think it'll be a function of price. Once Bitcoin gets to like 35,000, people are like, oh, it's moved too much. Let me barrel into Ethereum, right? That's what I think. But
yep. Bitcoin shorts obliterated.
I think XBI is one of the factors in the whole regional stuff that's holding us back a little bit. But to me, it really looks like the shakeout candle before the monster run, right? After consolidating for 6 months, massive move down. Everyone's like, it's over. And then it goes, whoop, whoop.
Well, I'm running out of patience.
Yes, everyone is.
I'm not I've never been a biotech investor, and I bought this wedge and I'm holding a bag right now.
Roll on the volume.
Roll on the volume, he says.
So that to me is an inverted hammer with volume, right? In this, it is over candle.
Damn it.
So,
look what you're making me do.
So I think a lot of this stuff right now is in spring phase, where it's trying to shake out all the recent bulls on some nasty candles, and it's a springboard to higher. And
and really the funny thing is, seasonality wise, we have this late February weakness a little bit, but then things from March OPEX until early May, like usually that's a pretty good seasonal time.
Yeah, so we always crash between Feb OPEX and March OPEX, right? It's our whenever we decide to crash, right? The years
Mhm.
that we're gonna be weak, those are the times. If you look at COVID, it was 1 month straight of death, but
Yep.
it all happened between Feb OPEX and March OPEX. And that was it. And then it was on off to the races, right? Even last year, Feb OPEX and March OPEX was crap. After March OPEX, we took off, right? Or into March OPEX. I think Wednesday of March OPEX, we took off.
Yeah, it's an interesting market right now. It really is. I like that the Qs are leading. I like that tech's leading. Gaga Papa wanted us to look at Tesla and shop. For me, I mean, we can turn these off to some degree. Gaga Papa, in my opinion, I never like buying the middle of the channel. That doesn't mean that this can't hold or go higher here, but I never like buying the middle of a channel. That's just me. But can Tesla catch a bid like everything else in tech? It absolutely can. Could it do one of these numbers? Where's my little path? There we go. Could it do one of these? Of course it could. So I don't put anything past Tesla on what Tesla can or can't do. It's not a buy point for me. The week's low, maybe take a shot. That's where I had that 159 mark. It was actually right there, so like 159.84. But
Yeah.
not for me, not where I want to get involved. But I don't know if you're trading it. I think there's probably some dollars to be made. GP.
So to me, Tesla kind of operates in its own universe, right?
Yeah.
Ultimately, it's the volume that came in around that 100 to 123 level. Yes, that volume is some of the biggest volume Tesla has seen years. That came in between 100 and 123. So when it finally cleared that 123 level, it just took off. And now you have like this rounding top back.
You know me though. I'm going to point this out every time though. Like you're it's not a negative divergence, but you're cooling off, you're rounding over. Like to me, it just doesn't look great. That doesn't mean it can't be great.
Yeah.
It's hard for me to want to be involved.
But you have quarterly numbers coming up in 2 weeks. Something to keep on Tesla's radar as it tries to run into quarterly numbers quite often. So it's better to hold Tesla and buy on dips than to trade it quite often. There's a lot of money and premiums and stuff that really push things around in this stock and has for years. But I like it. I wouldn't be surprised if this is over 400 by the end of the year. That's me.
400 by the end of the year.
This is so like if you're looking at this chart, this is very similar to the NVDA chart, right? And Baba is in the same kind of category. Is that you had this big move down and then big move up in a short time frame. Come back.
So just to be clear, GP saying you're going to get around 140% from here. Book it.
I said I wouldn't be surprised.
This is not financial advice.
Yes. But I wouldn't be surprised by it, right? So it came into about a 50% retracement of the move, right? Like it's very similar to it starts at some point a wave 3 move, which is 161 extension of the wave 1 move. And the wave 1 move was from 100 to 217, right? So 161, I think, gets it to around 315 or something like that.
I don't think at this point anyone who's kept up with Tesla should be surprised at anything that Tesla could do, right? Whether it's get monkey hammered down or hit the afterburners to the moon. Like I don't think anybody would be surprised.
Yeah, and really they're still growing, right? And their March numbers, I think, are going to be insane because of what they did with the Model Y pricing, right? Like it's insane the amount I see in these parts right now, especially of the Model Y. And once they started giving the instant credit and you didn't have an income requirement, the inventories got cleared out immediately, right? So it's going to be interesting to see what happens at Tesla. I think it's just the buy it on most dips and watch it go higher over years.
The other one was Shop. I know you like Shop, GP, so I'll let you speak on it.
So to me, Shop is a miserable trader. It's very similar to Netflix as a trader, but it on earnings, it had a bad reaction, came back to the top of the base, and it's been muddling around at the top of the base here, the base that got established for 8 months. And it's kind of holding above that 40 level, which I think is really important.
Yep.
And I think at some point they start to move higher. This is small businesses. And what do we know about consumers right now? The economy is pretty strong, right? Like banks are failing, whatever. Maybe the regional banks are going to cause the consumers to die eventually, but so far we've seen a fairly resilient American consumer.
It's a pretty clean chart, I think, actually.
Yeah. And so the whole my whole thought process in this conversation is that 2020 never had a base, right? Because we had this massive full fire QE that was released on the world. And so a lot of charts that came back and have been basing at the 2019, 2020 base, setting up these reversal patterns, are all part of this consolidation of pull forward demand and the next leg higher. And the next leg higher is always the one that's a question, is whether it's 1 year base, whether it's a 5-year base, whether it's a 14-year base like 2000. I don't know yet, right? That's not what we need. More numbers, we need more stuff. But to me, this is a general kind of thought process. Is it came back and it's building the base where it never built the base.
Yeah, I think it's a pretty clean chart. When you look at it, I mean, you clearly broke the downtrend back in November. You're at the top of the range, and I pulled the range box all the way back to go back to that 2000 base that we didn't get, that GP was referencing. And you're at the top. I mean, you're flirting with breaking through. You did break through it, and then you fell back through it on earnings. So if you can, if you're a Shop owner and you can get above that 46, 47 level, I think it pretends to probably be pretty good things up to the upside.
Yeah. Can we talk about all the distribution we see
everywhere?
Can we start with our favorite? Can we start?
Oh, yes. I was hoping you'd say XLE.
Yes. This makes me happy.
well, I mean, let's take a step back. Let's go to Chevron, right?
Go to DVN.
No, we're just going to hit them all. Exxon, Devon, Marathon,
MRO.
Not as bad.
No, I don't think oil.
Marathon Petroleum and Marathon Oil, they're two different ones. They're two different companies. But yeah, MPC and MRO, VLO. Like you pick one.
No, I think so. I think OIH outperforms XLE over the next 5 years, right?
Yeah, we talked about that.
Yeah. So I think oil services, which is some of the ones that you're showing that aren't that bad, like SLB, Schlumberger.
I didn't show the slob.
Not bad, right? It's retesting the breakout. I don't think this is as bad as a chart as the other ones, and it could be just a full distribution cycle. This one doesn't look as much as a distribution. Rig doesn't look like a distribution cycle to me. It looks like a accumulation and retest. So I think this is where things start. But this is not just XLE, XLU, XLP, XLV. It's across the board.
Yeah, there's a lot of bad out there. And you know what my next favorite one to go to will be, that we have been screaming about, XLV. You know, you pull up a name like CVS. Oh my God. Like, yeah, let's catch this falling knife. Like, what's here to be caught? You tell me.
I think you do here, but it's a short-term bounce, right?
Yeah, no, I mean anything can bounce, but
Yeah.
like this just does not look good. Johnson and Johnson. Like,
Not terrible.
not terrible, not wonderful either.
No,
I mean, you might
CVS
get a
looks
bounce.
awful.
You might can get a bounce. Let's see. Eli Lilly. Actually stronger.
Pull up cat.
Gilead. Oh my God, the Widowmaker is widow making again.
I think this is a retest, right? But this is,
You think?
yeah.
All right. I don't know. Looks like it fell below the range after it broke out.
I think the breakout was above 77, I think is what. And it's kind of holding that area.
Well, I would say above 86.
Yeah.
But we can get nitpicky. Bristol Myers. I mean, just not great. Not good looking charts to me. UNH, another name in that sector. Just continue.
How's Humana doing?
I have no idea.
Yeah, I haven't looked at it either. Just curious since you bring all these.
Not as bad.
Yeah. What about Prudential?
True. Oof. Oof. Well, I mean, that looks like Ally. Marion Saldino, do you correlate XLE distributing with recession picking up, killing commodities?
No.
I think it's rotation station, right? Like everything that worked in 2022 is not going to work in 2023, like everything that worked in 2021 didn't work in 2022. Money rotates and finds a home to grow. It doesn't stay stagnant.
And there's only so much money in the markets, right? Ultimately.
Yeah. And in the XLE, one thing that we have known is they have been selling the companies have been selling shares like crazy for the past year. So it's only a matter of time before that gets distributed to everybody else.
Yeah, as I've said quite often, momentum wanes, then it collapses, right?
Yep.
In distribution cycles. And to me, this is not about a recession, but this is more about peak earnings versus, right? So if you're taking a step back a few years, 2021 was ultimate tech peak earnings, right? And the markets kind of kept drifting higher based on the mega caps or whatever. And then 2022 came as markets kept drifting higher, but a lot of things kept going sideways, right? Amazon was one of them. Apple was one of them. Apple kept kind of moving higher but Amazon was one of them. And Roku and Square kind of just drifted sideways for all of 2021 in the middle of peak tech earnings. And then as soon as earnings started to kind of come down, you saw that in 2022, the distribution cycle just went kaput. So that was 2022 for energy for me, with peak oil at 147. That was going to be their peak earnings, right? And so 2022 was all of that distribution cycle kind of taking place. And what you're seeing now is that end of that distribution cycle is where you start seeing these 5, 10, 15, 20% moves down. And you're like, what the hell is going on? And I love the argument that Buffett is holding Oxy, right? And that's the reason Oxy won't fall. And I'm like, I'm pretty sure Buffett sold all his airlines at a massive loss in 2020, right?
Yep.
He's not, yeah, he has the ability to buy Oxy just outright. Yeah, but and yes, that's an X factor. I get that. That's an X factor with a lot of companies. Ultimately, someone wants to come in and do it. Um, but you notice how he hasn't really bought above 60. He waits till it gets back under 60 and then he buys. Um, so if he wanted to buy it outright, he thought this was going to be awesome. Why wouldn't he just bought it at like 58, 100%? Right. So
He's not stupid.
no,
He might be old, but he's not stupid.
yeah. And look, it's a possibility that it gets bought out and it's the one that I'm wrong about, but a lot of it looks very similar to Amazon. So um
So Marion says, I can agree with you what you're saying. What makes me question is now the banks are also having their own struggles, which tells me we are having more going on underneath the surface. I don't think every bank's having their struggles though. Just to be fair, Marion. JP Morgan is going to be doing more business now because your big banks are going to be healthy. I mean that excuse me, sorry for my coughing. Got to get a cough button. One thing that happened was regional banks don't have to play by the same rules as many of the major banks do. So all these stress tests that have been happening in the banks, most of that's been happening to the big banks, the biggest banks.
yep.
So if anything, we're going to see more something that no one wants to hear, but more consolidation in the upper echelon of the banks.
What was it? They took in $2.4 trillion in deposits over the last week.
Yep.
That's just insane, right? And um once again, these are assets that have diminished in value, but they're still assets that hold value if you hold to maturity.
Yep.
So they're sitting in their hold to maturity portfolios, and if you hedged your duration risk, you should be okay.
Yep. The
Right?
big
Like
bank,
if you if
the
you
big banks, they have money. They have the capital. That they does the trickle down effect happen? Like if all or a majority of regional banks went under, yes, we're not, let's not be naive. The entire economy and the financial world would be in some pain. But the business that JP Morgan, Wells Fargo, Citibank, Bank of America, Goldman Sachs, Morgan Stanley, and those are investment banks. They're not, big money lender banks. The money that they have in their war chest is just phenomenal. And whether it's the Pac West or the allies out there, those are the guys that, I would think you'd want to see make it through and not wind up being a Silicon Valley bank. And let's make no mistake, SVB wasn't just your typical go down the street, start a checking account there. I mean, you could, but it wasn't like Truist, right? It wasn't like Fifth Third or Cullen Frost or banks like that. That was a very niche bank.
and they didn't manage any of their risk, right? So
And
ultimately,
Silvergate, another very niche bank, right?
yeah.
Silvergate, heavy into crypto. Signet, very into crypto. And, we, for months now, we've all been surprised that a lot of these, I mean, it started with FTX, right? And other crypto brokerages. That had to be a place where you also had to have a lot of capital in the bank, and a lot of these places didn't. They were out doing things like, well, FTX just, complete scam. But when you're on the losing side of that trade, I mean, Bitcoin was down what, 80%? No, something like, not 80%, but it was something stupid. That hurts. And when that's your bread and butter, then you're in a world of hurt.
Yeah.
GP, anything? Yeah, Bitcoin was down almost 80%. I was pretty close. One thing we always do, and I can't believe we've already ran through 50 minutes of time. One thing we always do is the one thing we like or we're looking for, and I'm going to turn it on its head today. And we can't mention the ones we've already named. But one thing you hate, like if you would go if you would join the dark side and short the piss out of it, what would it be?
LMT.
LMT. You really don't like Lockheed Martin. Doesn't look great.
How many times are you going to attempt to break the consolidation highs before you die?
Doesn't look great. I'm having a hard time disagreeing with you. Wow.
And I've talked about LMT, so that's not fair. Let me find something else.
Yeah, I'm just putting you on the spot because we always bring up the ones we like.
So, okay, here's one that no one's going to like. I'm going to say gold.
Oh, yeah. No, people are going to be mad in the comments on this one.
I think it's the premature breakout for gold, and I think this gets absolutely slammed. That's my personal opinion. I don't think it's ready yet. I do think it's moving higher, and Nick and I have talked about this in detail on just wait for the breakout.
Yeah. I'm not going to name any names, but I saw this chart today on the old Twitter, and I'm not saying it's wrong, but it kind of made me chuckle. I mean, you want to call that a 15-year cup and handle? Sure, go for it. But I don't know.
Yeah, so this is one of those contrarian trades that I actually think if you're looking at the weekly, there's a decent divergence on the weekly there too. I think this fails. I ultimately think this fails and traps a bunch of gold bugs.
Well, even if it is a 15-year cup and handle that we got going on here. I'm not saying it is. I'm not saying it isn't. You can still wait and buy the breakout. And that's what we've been screaming here for months. There's no reason to get your panties in a bunch to go out and just go buy gold that's been nothing but a terrible trader for years. So I'm not wishing gold traders, gold bugs any bad luck here, but yeah, we're gonna get some hate. Hey, everybody, like, comment, and subscribe on GP's gold take here.
Yeah, so I think if we fail here,
tell a friend.
If we fail here, which I think we will, if we do get to the 1780 level, is where I think we should start looking for a longer term long, right, and not buy the breakout. I think one last failure here is what I'd be looking at. But yeah, that's my haven't talked about that in a while, but I think this is a short.
On what I don't like the XLI.
The industrials?
Don't like them.
Okay.
And specifically, I don't like Boeing.
Boeing got so diluted in 2020, it's going to take forever.
I do not like the Boeing setup. I do not like the Boeing chart. Yeah, it just looks like it's screaming like I'm ready to fall off the cliff. And that doesn't mean it's going down to 120. It very well could, but I can see a good 50-point drop in this guy like no problem.
Yeah, and if your thought process is recession of oil, I mean, recession is what's causing oil and energy to be weak, then why would Boeing survive?
Yeah, I don't know. Like, they got a big deal from Saudis the other day, and it didn't really do a lot of good.
Nope.
Right? Like, still down on the week, down over the past 2 weeks. So I don't like XLI, and I don't like Boeing specifically. Ranveer, our good friend, wants your take on Netflix. I know my chart's different than yours, but I'll pull mine up for the sake of having it.
I don't have a great take on it, right? I think from a monthly perspective, you have the monthly MACD, which is what dominates my bullish thesis when it's in a pullback mode. I do like how it held the October earnings breakout. That level was like 280-ish or something like that. So 1021 was 289. It came back and retested that and held. It's essentially making higher highs and higher lows, but it's definitely not acting like the Netflix of past to me.
But if we're in a bull market, and this is your bull market leader, GP, I'm just saying.
Yeah, and it held where it needed to. It actually was the first to turn. What was that? Well, when did the Qs turn? Was it on Monday morning, right? Or Tuesday morning, whenever it was?
Tuesday.
Right? Netflix was the first one to break out. It held green all day while so many things were red, right? And it still got the indication that it's gonna go higher to me. You have the monthly MACD bull cross, but it's in a negative territory, so it's kind of whatever. We also have the daily MACD starting to cross over now, or attempting to curl up, and then the weekly's crossing down. So you have a time frame misalignment here. My my thought process has always been that May is when Netflix breaks out. That's when it gets through the cloud, the top of the red flat cloud, because that I've looked at so many charts on that. When you have a weekly flat red cloud, it usually breaks out after it passes that flat weekly cloud. And for Netflix, that cloud kind of ends first week of May, second week of May. If you look at NVIDIA, that's a good example here. It was a flat top until February UpX, and then it tried to break out a couple times and then finally broke out, right? So that's my thought process on Netflix. Tends to only move during earnings anyway, and the rest of the time is just gyrations. But I like it. I like it for a longer term picture. It's been acting like crap for the last few.
Ranveer, I would say you want to see it break above like this 335. That's kind of where the gap was. Back in the channel and above 335. Right now, if we just try to do the downtrend, like it might already be breaking out of that. But this is where your resistance is up here. Up here.
Yeah. And the fact that RSI got oversold on absolutely no news on Netflix is just bonkers, right? But
I'll tell you what I do like about Netflix. That it sometimes people make trend lines and channels as a hard rule. I don't necessarily. So it came back into this resistance of this channel, which in my mind is not a bad thing. It's like setting the trap to spring higher. And you've got this RSI bounce here.
Yep. And still is turning.
This line has been on here for literally months. This was the pre-earnings in October. Or this was the earnings candle right here. And that RSI breakout has held that the whole time. So I think that, Netflix isn't what I want to trade right now. But if I wanted to get long, it might not be a bad shot here at 300. But it could absolutely pull back in lower. But I don't think it's the worst chart out there. It's just there are better setups, as we would say.
Yep. And personally, to me, is if it breaks the October earnings candle, 250 won't hold, right? I think it goes lower, but the stows are starting to turn up on the weekly, which is also important here, as it was overbought for months and then cascaded down, and it's starting to turn up. There's a lot to like. There's also a lot not to like.
Yeah.
And that's typically what Netflix does. I have January leaps on this, so that's
I initiated 2 new positions.
Yep.
And actually dumped out of a small one on Okta, which I'll touch base on really quickly while we're running out of time. I love Okta. I think Okta is a great company. I also think that Okta might be starting to show some signs of a little bit of weakness here at this level. So again, as a small position, it's just a way for me to take some cash. It had bounced back. I was still out, I think about 18% from where I bought it. So not a huge loss, but not one that I wanted to hold since I already have so much Bug and Sentinel-1. I didn't need to hold on to another cyber company. But I parlayed that into some Hood. Hood's an interesting chart to me. I still think it can come lower, but I don't know. I like it for a trade. I think it can probably get up to, I don't know, 11, 12 bucks maybe. And that'd be nice.
If those altcoins start behaving better now that Bitcoin
Everybody's back trading on Hood.
Yep.
So I kind of like it for a short-term trade. It's not something I'm going to be heavy in for a long time. But another name I also liked in the tech space, Dell.
I saw that.
Nice bounce, really clean chart. Nice bounce off the low, retested it. I actually could have bought it lower on Friday, and I didn't because I was already in some sold puts. So I just let the puts ride. So I basically got my puts for even money. So I'm not too, I got assigned for even money. So I'm not mad at that. But as we were talking about SAP and some other, where business buys their material, like businesses buy Dells.
Yep. Even though they're terrible.
And I feel like this can be a good trade up into the 40s. So from 37 to 40 something, I kind of like it. But we'll see. Neither one of these are positions I plan on marrying or having with me forever. But I think these are profitable trades. I love the Stoke with a sharp bounce there. I love the RSI with a sharp bounce there. So we'll see. We'll see how those two do. But just wanted to point those out because I haven't made a whole lot of moves in my long term other than just adding names here and there. But just wanted to call that out.
Can I talk about one that's not tech?
Go for it.
So this looks like it's ready for the next leg higher, and I don't even like the CEO or the company that much, but Redfin.
We talked about this a couple weeks ago. Yeah,
but
it looks perky.
Add in that volume.
It looks perky.
If you add in that volume, you can see it's starting to pick back up. You had the move that blasted out all the shorts that got short late, and now you have accumulation rolling in, right? In this flag here.
And you got one of these trying to work out too, maybe.
Yeah, I don't know so much about that, but this has potential to get to 13, right? And that from here is what, 60%, 70%?
It'll be all right.
Yep.
We'll take one more question and we'll do what we like. Unless that was the one you like. You wanted to mention the one you like was Redfin.
No, just talking about stuff. That's all.
DigitalOcean. Don't know anything about DigitalOcean. I think you brought it up before, GP.
Yeah, a long time ago. Future leaders of America.
Just going to do a quick down and dirty chart here. It's pretty close. If I extend it up. Yeah, I think that's kind of like what you're looking at here. This is your range. And yeah, I would think above like 35. I mean, you're in a pretty good spot.
Yep. If you're going in the same kind of new IPO space, GitLab, GTLB. Awful reaction off earnings. Google went in and said, I'm going to buy it all up. They actually started buying post earnings.
Wow, that's a big buy.
They started buying at 28. So it didn't even get to that during the day. They were literally buying after hours earnings.
Yeah, they were eating that up in the 28 and 29.
Yeah, so I think Google ended up buying 640,000 shares of GitLab here.
That's crazy.
So one to keep paying attention to, because if they found it valuable at 28, they could come in and buy more, right? So
yeah.
But to me, this is it's double bottom too from that candle, that big candle, volume candle from last year.
So my name, I'm going to say that I'm watching, not necessarily that I'm finding actionable right now, but we were talking about the banks and Morgan Stanley. We are in the Gorman buying zone. Let me pull up my other chart here. What is that nonsense? I've got too many. The Gorman buying zone. So basically this range box has been authorized for James Gorman of Morgan Stanley to continue buying their stock. And where is it? Right on it. So I kind of find that interesting. As you notice, it comes into the zone and it doesn't stay long. So could it come into 75? Sure. Could it bounce out of here in the 80s? Sure. I just find that that's a interesting place for me to watch Morgan Stanley's stock.
Yes.
And I'm watching Qualcomm also. I like Qualcomm.
There's a lot to like.
There is. But back to what we were saying with Netflix, or sorry, with NVDA. It's all going to be determined on what the SMH does as a whole. And if it keeps going higher, if it breaks through the range, then all semis should do good.
Yep.
Our good friend on my way to money asked about Marvell, who's a stock that I've owned for a while, laggard. But if SMH goes higher, Marvell's going higher, regardless if it's a lagger. So
that was a nice volume candle on last week at the bottom of whatever that base is there.
For which one, Marvell?
Yeah, MRVL, right?
Yeah.
On a weekly, it was a nice candle. I think long against 3650 seems to be the point, right? So
I'm in this guy since the teens, so I have done the Lord's work on this one.
Fair enough. And with all this news, we probably see tech lag this week, right?
Yeah. Well, if Daddy Buffett's getting into the banks, I mean, you could expect them to step up. Our good friend Rachel. Rachel, thanks so much for joining us. We miss seeing you and hearing from you. Thanks for joining. She wants to know about Oracle GP. I think you said something about Oracle not too long ago.
I liked Oracle until the earnings. Wow, I haven't actually looked at the chart. I forgot about it. It wasn't a bad candle off the earnings. It looks in the middle of some zone.
Yeah.
I think if it's under 81, you stop out.
Yep.
I think if it's above 81, then it could potentially break out here, right? What I don't like about Oracle's chart, which I didn't like prior, even though it looked good, was just some of the distribution candles that existed in this chart.
You got the upside down happy face.
I think there's so many better names out there, personally, but that I wouldn't be putting any money to work here.
Yeah, I wouldn't either. Not my game. Oh, before we go, Baba, we were talking about China's. I'm in those puts too to open on Baba. I think it's a tempting place right here in the low 80s.
I love it, right? So I think it's a very, very, very similar setup to NVIDIA here, right? Monster move off the bottoms. You had a 61.8% retrace, which is exactly where it's holding here. In part of the, if you zoom all the way back on Baba, go back to the monthly or whatever weekly, and go back to where it first IPO'd, you have this, go weekly. I think monthly doesn't look as clean, but you have this inverse head and shoulders pattern that's kind of forming it at the 61% retrace at the kind of the top of the base from when it first IPO'd and died. So I like the setup. It's very similar in that circumstance too to NVIDIA. It came back to that base from 2019, 2020, undercut it a little bit and then rocketed higher, came back and retesting it here. So as long as this kind of above 75 level holds, I would say, I think this is on its way to move much higher here. I don't like owning shares on this because it's Baba. I'm in calls. That way I have my risk defined. But I didn't buy full position because I think it can still pull into 75. It's a starter position.
Yep.
So I'm watching because it usually needs like 1 or 2 weeks at this like 61% retracement, sometimes a few more weeks before it starts to move up or kind of hold this area. So that's what I'm watching for here. If it breaks 75, I'm out. Take the loss, move on.
Yep. 100%. I think I sold puts to open because I think it can definitely run back up to this 110 level at the very least, and that's better than a 20% gain, and I'm happy with that. And I would be gone because it's well noted how I think of China stocks.
Yeah, but are they the only country in the world that's in QE?
I don't know.
Well, we might be now, but
so and the reopening story, like I mean, we all know Baba's a massive player, but I just don't trust the.
And it's so cheap, dude. It's so ridiculous cheap that the fact that it went from 120 to 81 to me is all technical and nothing to do with actually fundamentals. So
yeah.
Which is why I'm using more retracements and stuff, because I think this is more technical now. This is not fundamentals. Because
I gotta admit, tonight flew by.
It did.
Hour and 15, just like that.
Yes.
Just like that. Thanks everybody again for tuning in. We've had some really good showings the past few TA reports. So really appreciate that. Really want to keep the momentum going. So just encourage you to like, comment, subscribe. We do this every week. On occasion, we have to throw in a sick day or a vacation day from here to there, but we let you know that beforehand. But thanks everybody. Thanks for tuning in. We really appreciate it. GP, without further ado, we're going to get Cookie on hopefully this week during a midweek session. I already reached out to him. I'm going to try to arrange that maybe for Friday. We'll see.
Okay, let me know.
but that would be great to have him on. We like to have Cookie on at least every quarter, and the quarter's up. It's hard to believe it's already the end of the quarter.
Yeah, it's kind of crazy.
Time just keeps on flying. We appreciate you guys. Thanks everybody for tuning in, and we will be back.